what you'll notice is that that is all just Twitter hype. Behind the scenes, it's almost as if they're working together in a sense to onboard these institutions at scale into this new on-chain financial realm. Because if we come over here to the BNY Mellon report directly from bny.com, you can see that both Ripple and Canton are conjoined in this article together. Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, I'm going to be giving you guys a live updated analysis on XRP Canton, going over technical analysis, the fundamental backdrop, and then towards the end of this, just reading some newly developed breaking news that has been taking place that is involving both Ripple and Canton network in today's video breakdown. Hopefully you guys enjoy the level-headed accuracy that we've been giving you guys here at CYPRX. If you guys do enjoy that, do us a favor, smash that thumbs up button and subscribe. So starting off with the private community report, the hand typed out news reports that I type out for the community members every single day during New York and Asia session to keep them in the loop with what's happening in the digital asset ecosystem, the risk on, risk off backdrop, just really keeping them down to earth and in the loop with what's happening. This is our January 4th, 2026 report. January 4th was Sunday. I always type out an overview for the week, what to pay attention to, what fundamentals are coming out, what's coming for the week ahead. And we particularly focused on our risk off scenario. So I'm going to read thoroughly through this so that way you guys understand the fundamentals, why the market is down today, why crypto isn't performing too well, why XRP and Canton have reached our bearish targets that we were analyzing in previous video breakdowns. Then we'll roll over into the technical analysis aspect. I'll give you guys an update, levels to be mindful of, institutional deltas and dark pools that we're paying attention to. And then we will end with the fundamentals and the news reports that have just recently come out today. All right. So taking a look back at what we were talking about at the very onset of the week on Sunday, I particularly mentioned to the private community members and made this available publicly to you guys, where I said, a risk-off scenario this week would unfold if we saw labor or economic data coming in stronger than expected, pushing back on rate cut expectations, Fed speakers reinforcing a hawkish or restrictive stance on monetary policy, rate cut probabilities falling meaningfully. That is very important there. Geopolitical tensions escalating or tariff uncertainty intensifying, and then, of course, any yen carry trade unwinds or Japanese finance ministers intervening with the currency. And I said, under these conditions, the dollar or safe haven assets would likely strengthen and risk appetite would likely fade, and crypto would struggle to sustain current support levels. And so now fast forward to January 9th, taking a look at our updated report. This is the report that I just hand typed out for the private community members. I actually need to change the date here. And reading over this, just so that you guys have a now updated overview of the current market landscape, this will also give you a future projection into what to be mindful of heading into next week, as we do have continued geopolitical tensions on the horizon, a new updated date for Trump's and tariffs Congress announcement, and then obviously, of course, the data in terms of the inflation reports that we're set to get next week on the US front. So reading thoroughly through the updated report as of January 9th, 2026. It reads, the total cryptocurrency market continued to see persistent outflows today, falling roughly around $20 billion on the session, hovering near weekly lows around $3.08 trillion. This ongoing weakness reflects a broader shift in global risk sentiment as geopolitical uncertainty intensifies and U.S. labor data continues to push back expectations for imminent Federal Reserve rate cuts. At the beginning of the week, as I mentioned, we had outlined a clear framework. If the odds of a January or March rate cut were to fall, crypto would likely remain under sell pressure. Here's a screenshot of that previous January 4th report. That scenario has now played out almost exactly as expected. Fed funds rate futures traders are currently pricing in just a 4.8% probability of a rate cut at the January 27th to 28th FOMC meeting, down sharply from a previous reading of 11.6% before the latest labor data. If you guys remember back on January 4th, one of the risk-off scenario bullet points that we had mentioned was if rate cut probabilities fall meaningfully right there, right? And we see that now reflected in real time today. The market is now pricing the first potential cut no earlier than April, reinforcing a higher for longer interest rate environment. This shift has boosted Treasury yields, particularly on the short end of the curve, while supporting the US dollar for a seventh consecutive session. A stronger dollar historically acts as a headwind for crypto and other risk assets by tightening global financial conditions and reducing liquidity appetite. On the labor market front, the latest employment report from the U.S. Bureau of Labor Statistics delivered a mixed but ultimately resilient picture of the labor market. Non-farm payrolls rose by 50,000 in December, slightly below the market expectations of 60,000 and easing from November's revised 56,000 gain. While the softer headline number initially suggested some cooling in hiring momentum, other components of the report pointed to continued labor market strength. The unemployment rate declined to 4.4% from 4.6%, beating expectations of 4.5% and signaling that labor market conditions remain relatively tight. At the same time, wage growth accelerated. Average hourly earnings rose 0.3% month over month, and they were in line with forecasts, but stronger than November's 0.1% increase. On an annual basis, wage growth climbed to 3.8% from 3.6%, exceeding expectations. So, taken together, the report delivered a mixed signal: slower job creation, but lower unemployment and stronger wage growth. For the Federal Reserve, this combination reinforces the case for patience. While hiring is moderating, the labor market is far from weak, and wage pressures remain elevated enough to keep inflation risks alive. And we saw that in the headlines today with multiple Fed speakers stating exactly that. As a result, expectations are solidifying that the Fed will leave rates unchanged at the January meeting and remain in a wait and see mode until there is clear evidence of economic cooling. Alongside shifting rate expectations, the US dollar continues to strengthen across the board. The greenback has now posted its seventh straight day of gains, reflecting rising yields, resilient economic data, and safe haven demand amid geopolitical uncertainty. A stronger dollar usually tends to tighten global liquidity conditions and typically suppresses speculative demand for assets like cryptocurrency. When investors can earn attractive risk-free returns in US Treasury markets, the incentive to rotate into high volatile assets diminishes. This combination of rising yields, fading rate cut hopes, and dollar strength has created a challenging macro backdrop for crypto in the near term. Adding another layer of uncertainty is the unresolved legal status of Trump-era tariffs. Investors had been bracing for a possible US Supreme Court ruling on their legality, but no decision has yet been issued. The court is now expected to release its next set of rulings on January 14th. And we know the market does not like uncertainty, and this puts the market in a state of uncertainty as these pending decisions continue to unfold. In the meantime, administration officials have indicated that a contingency plan is in place to keep the tariffs intact should the court rule against them. This kept markets in a state of suspense as tariffs carry major implications for inflation, trade flows, corporate earnings, and geopolitical relationships. Until there is clarity, this uncertainty acts as another headwind for global risk sentiment. Now, just as the market was beginning to stabilize after developments in Venezuela, new geopolitical flashpoints have now emerged. Large-scale protests have erupted in Iran, the largest in years amid worsening economic conditions driven by sanctions and drought-related shortages. President Trump has publicly warned Iranian authorities against violent repression, signaling heightened U.S. involvement. So far, at least 42 have been reportedly killed, and any escalation into the weekend could further fuel risk-off sentiment across global markets. At the same time, Trump has renewed his push for greater U.S. influence over Greenland, an autonomous territory of Denmark and a NATO ally. The island holds significant strategic value, both military and economically, including rare earth resources and Arctic shipping routes. China has already established a rare earth production presence there, and Russia maintains submarine routes through the region. The U.S. already operates an Air and Space Force base near Nuuk, but Washington is now expanding its influence further. Secretary of State Marco Rubio is scheduled to visit Copenhagen next week, likely to discuss American interest in Greenland. So we will be paying very close attention to those headlines here in the private CYPRX community. While Trump has publicly floated the idea of buying Greenland, the more realistic outcome would be an expansion of U.S. military infrastructure, a move that could heighten tensions with the European Union. Together, these developments reinforce a broader realignment in U.S. foreign policy, with Washington shifting focus towards the Americas and the Arctic while pulling back support from Europe. This geopolitical reshuffling has a meaningful implication for global trade, defense alliances, and financial markets. So, what the markets are watching for next week. Now that you guys understand what is currently weighing on market sentiment, and again, we highlighted all of these things in our report at the very beginning of the week. So all of our private community members are already enlightened and enjoying their weekend. They're already ahead of the curve amongst the vast majority of retail traders that are confused, that are miscombobulated by the fact that their portfolio is not performing as well as they had previously thought or anticipated via the bullish moon boys that are constantly touting this ridiculous, nonsensical bullcrap to you guys, instead of locking in and focusing on the things that matter week by week, which I highly suggest you guys do. We had talked about labor market conditions. We had talked about Fed speakers reinforcing a hawkish stance, rate cut probabilities falling meaningfully, and geopolitical tensions escalating, creating a risk-off backdrop. And now fast forward to today, we are seeing all of those things unfold in real time. So next week, what do we need to be mindful of in the coming days ahead? Looking ahead, markets face a packed calendar that could shape sentiment across equities, bonds, currencies, and crypto. Fourth quarter earnings season kicks off with major U.S. banks reporting, including JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, and Morgan Stanley. Results from BlackRock, Delta Airlines, Bank of New York Mellon, and PNC will also provide insight into consumer demand, capital markets activity, and credit conditions. On the macro front, the December CPI report will be a central focus. Headline inflation is expected to remain steady at 2.7 year over year, while core inflation is forecast to edge higher to 2.7% from a previous reading of 2.6%. Both measures are expected to rise 0.3% month over month. The delayed PPI report is also due from back during the government shutdown, with the producer inflation expected at a 2.7% annual reading. Retail sales are forecasted to rise at 0.4% following a flat October reading, while industrial production is expected to grow 0.2%. Investors will also monitor housing data, trade balances, capital flows, and federal budgeting, and regional manufacturing surveys. And if you guys don't know how to track any of this information, or when it comes out, where it comes out, how to interpret it and digest it for a risk on, risk off backdrop, again, you guys can always tap in with the private CYPRX community as we cover these things on a daily basis. In addition, we also have several FOMC officials who are scheduled to speak, which could further shape rate cut expectations, which we'll be paying very close attention to. So what would need to change for a meaningful crypto recovery, or a sustainable crypto recovery, instead of these pump and dumps that we've been seeing recently with this consolidation between November and now? For a sustained recovery in crypto markets, several macro conditions need to improve. First, we need to see a clear easing of geopolitical tensions across the board. We're seeing geopolitical flare-ups all over the globe, in Japan, China, Taiwan, the Middle East. Now we have Ireland, Venezuela, all these things unfolding at a very rapid pace, causing excessive amounts of demand for safe haven assets like gold and the dollar, and even silver in some cases. We need to see those things ease, and we need to see profit taking in safe haven assets. We also need to see inflation data that is convincingly trending lower, supporting the case for continued rate cuts from the Federal Reserve. On top of that, we need to see U.S. economic data, any data that comes out next week, scattered throughout the week, that supports the likelihood of rate cuts in 2026 without showing signs of an economic recession. And then we would also, of course, like to see a tariff outcome that markets view as a net positive. And one thing that I did not bullet point here is we would also like to see positive regulatory developments in the crypto ecosystem. We all know that there is a high probability that we are set to get a passing or ruling or some update on the market structure bill in the coming days/weeks ahead. We would like to see that be a net positive reaction for crypto markets. Until those conditions emerge, the broader market environment remains relatively fragile. As highlighted at the start of the week, sentiment is likely to remain choppy or tilted towards further downside unless the case for Fed easing materially improves. For now, crypto remains caught in the crosswinds of tightening financial conditions, resilient labor data, dollar strength, and rising geopolitical risk, a combination that continues to suppress risk appetite and limit upside momentum for now. So hopefully you guys have enjoyed these updates as we've been giving you guys accurate technical analysis and fundamental updates when it matters most, just showing you guys some insights into the private community as we deliver these things in a timely manner to our community members every single day. To show you guys the level of technical analysis that we operate with, here is our update from just a couple of days ago on January 6th. 3 days ago, we had been calling for a pullback on XRP down into the low $2 range. Fast forward to today. You can now see that pullback down into the 50 moving average and down into that low $2 threshold that we had highlighted in that previous video update has now materialized and come into fruition. Prices remain suppressed below the $2.27 institutional dark pool and is starting to make its way back down to that $2 area of interest, where I will personally start to see if buyers can reaccumulate, defend their previous positions, trap sellers, and possibly become aggressive, pushing price back to the upside. Another update that we gave you guys in regards to Canton in a previous report on January 3rd, 2026, specifically highlighting the sophistication and accuracy of our institutional dark pools. We had talked about how price could possibly pull back when it was trading at around the 15.578 cent psychological level down into the 3.480 cent psychological level, and how that would be the last area of support before we see a deeper correction on Canton coin. Now, fast forward to today, you guys can see updated in real time. We have since then pulled back from that 15 cent region. We came straight down and consolidated into that 13.480 cent psychological dark pool. And we have now broken it, turned it into a resistance, and started to make our way down into our overall bearish targets of the high 11 cent range to hopefully the 9 cent psychological level. Giving you guys a clear update on that, coming over here, reading thoroughly through this real fast so that way you guys see the targets that we're paying attention to, and then we'll just take a look at that on the trading view landscape. Right now, XRP has pulled back into the 50 EMA as mentioned in our previous update. However, if buyers can trap sellers and hold price above the $1.98 to $2 level, I'm personally optimistic that we could see a bounce from here back up into the higher level deltas around 249 to 263, or $2.49 to $2.63 as our next bullish targets. To the downside, however, if sellers overpower buyers and become aggressive, coupled with sentiment worsening over the weekend or into next week due to things like higher inflation or continued geopolitical uncertainty, and we see sellers push price below the $2 threshold, this would open the door for a revisitation of our institutional dark pool at the $1.84 range. Below that, if sentiment were to continue to put pressure on risk assets, our next downside target and possible area for reaccumulation would be roughly around the $1.69 to $1.39 threshold. So just taking a look real fast on XRP before we head over to Canton. Right now, the question is where we previously in a video breakdown a couple of days ago had highlighted using our institutional order flow software, we saw buyers break above an institutional sell wall that existed at about $1.98 to $2. Buyers were able to turn that into support, trap sellers, and become aggressive enough to push price slightly above the institutional dark pool at $2.27. Since then, the market has corrected clearly because of the risk-off backdrop. And so the question now is, now that buyers are possibly getting another opportunity to defend at these lower prices, can they hold? So like I mentioned, if price can hold above the $2 threshold, we can see buyers reaccumulate, possibly see risk sentiment support a risk-on backdrop and improve from its current condition. Maybe then we see a revisitation of the $2.27 threshold. If at any point in time we can see this unfold and we can see buyers trap sellers at the $2.27 threshold, turn it into support and become aggressive, that is going to open the door for our higher targets, i.e. $2.49 to $2.63 before we see more profit taking or buyers stall out on XRP. To the downside, if the sentiment worsens compared to where we are at today, and we do end up seeing sellers push below the $2 threshold, trapping buyers, turning it into a resistance and becoming aggressive, that opens the door for a complete pullback of this previous January 1st move, pushing us back down into the $1.84 range. If $1.84 breaks, that's going to open the door for lower level targets. Next on our radar are the institutional dark pools at $1.64. And below that, we have $1, I believe, 39 on our radar. I just don't have it on my trading view charts. You guys now have both upside and downside targets to be mindful of on XRP. Personally, I'm setting some alerts and some alarms. I would favor a deeper retracement on XRP, as I would love to accumulate some more XRP at these lower level targets. As for Canton, we had been probably one of the only communities covering Canton where just a couple of days ago, when everybody was talking about it and it was rallying above the 15-cent threshold, we had publicly addressed the possibility of a pullback. I even highlighted and created this full breakdown for you guys talking about a deeper retracement on Canton and not chasing the hype around it and waiting patiently for a deep retracement. You guys can go back days ago and watch that entire breakdown going over structure, institutional dark pools, and what to be mindful of and pay attention to in terms of how to really read technical analysis from a logical standpoint, utilizing no retail-based indicators, all institutional insights. Now, coming over to the Canton update, you guys can see that that pullback that we had discussed in that previous video breakdown has unfolded in real time. So to the downside, now that we have broken the two thresholds in which we had mentioned we needed to see Canton remain suppressed underneath of in order for downside targets to come into fruition, the first area of interest that I'm looking to reaccumulate some Canton at is the 11.5 cent range. Slightly underneath of that is our next institutional buy dark pool at the 0.9453 cent psychological level. And if sentiment or the pullback were to continue to worsen from there, next on our radar will be a full-on retracement from the December lows back down into the low to high 5-cent region. Anything below that, I will continue to keep these on my radar. We do have some institutional dark pools at the 0.2602 cent psychological level on Canton. And below that would be very substantiating if it took place, and a huge opportunity, in my personal opinion, that I will be taking advantage of, not financial advice, if it did come into fruition, will be a full-blown drop down into the dark pools that our software has highlighted at the 0.001 cent psychological level. That is a far stretch from where we are currently trading at, and we would definitely need to see a huge risk-off backdrop unfold and a massive drop in the entire cryptocurrency market in order for that to unfold, but still something that I'm being mindful of. To the upside, if we can rekindle the losses from the 13.480 cent psychological level, and we can see buyers turn that into a support, sentiment starts to flip back risk on, and we see buyers become aggressive, the next hurdle that we need to overcome before we see any higher prices on Canton is the institutional sell dark pool that rests at the 15.898. Above the 15.898, next on our radar for possible profit-taking areas of interest are the institutional dark pools that come in at the 19.214 and the 22.582. You guys now have both upside and downside targets on Canton. If at any point in time you guys want daily, honestly, hourly updates on this information, our institutional scalper literally does not sleep. I don't know how he does it, but he is constantly giving our private community updates on a timely manner on XRP, Canton, literally hundreds of cryptocurrencies across the board. It's almost like he has a team working for him inside his own realm of existence, but he's constantly talking with our private community members through price action, utilizing screenshots from our institutional software, giving timely updates when they matter most. And you guys can access those by heading over to CYPRXtrading.com and tapping in to our private CYPRX Discord. Fundamentals and technical analysis out of the way. Now let's get to the news headlines. Recently, we just saw CoinDesk post this article from January 8th, 2026. So just yesterday, stating tokenization supercycle set to drive crypto's next leg higher in 2026. We've seen so much back and forth between recently XRP community members starting to diversify their portfolio and get into other assets that might perform well in this next cycle, and vice versa. People that don't hold XRP talk crap about XRP, this, and that. And I just think it's so refreshing to see a fundamental development that houses multiple digital assets, blockchain networks, and involves both Ripple and Canton. In regards to this tokenization super cycle set to drive crypto's next leg higher in 2026, what did we just recently see Canton post on their X profile? BNY has launched tokenized deposits for institutional clients, enabling bank deposits to move on chain, improving settlement efficiency and liquidity management. And then at the same exact time, over on Ripple's X profile, today, our partners at BNY Global launched tokenized deposit services for institutional clients, bringing the promise of digital assets directly into the banking system, with Ripple Prime as an early adopter. What I love most is that you will never see these large institutions and organizations like Ripple and Canton combating each other. And instead, what you'll notice is that that is all just Twitter hype. And behind the scenes, it's almost as if they're working together, in a sense, to onboard these institutions at scale into this new on chain financial realm. Because if we come over here to the BNY Mellon report directly from bny.com, you can see that both Ripple and Canton are conjoined in this article together. So I don't even know what to say about that, but that just silence all of the naysayers and the comments that have been going on back and forth between communities, bashing each other or people talking about new projects or this, and that. This silences it all and shows that the industry is working together to onboard these institutions at scale in a tokenized world. January 9th, 2026. Key takeaways. BNY, a global financial service company, has taken the first step in its strategy to tokenize deposits by enabling the on chain mirrored representation of client deposit balances on its digital asset platform. This launch helps advance BNY's ambitions to support programmable on chain cash for institutional market infrastructure. Early participants include a wide range of prominent financial institutions and digital natives. How it will work. Beginning with collateral and margin workflow use cases, this launch extends BNY's cash flow capabilities by creating on-chain digital books entries that represent participating clients' existing demand deposits and claims against the bank. This capability operates on BNY's private permission blockchain and is governed by the company's established risk compliance and control frameworks. Clients' balances continue to be recorded on BNY's traditional systems to maintain regulatory and reporting integrity. Now, it goes on to talk about why it matters and this, and that. And we can get into all that fluff. But what I really like is that both Yuval Ruse commented on this and an individual representative from Ripple Prime. So Yuval Ruse right here says, we welcome the opportunity let me reread that. We welcome the opportunity to work with BNY as they advance as a practical institutional ready approach to tokenized deposits. Bringing deposit balances on chain can make asset mobilization more efficient and unlock liquidity across key workflows. This direction aligns closely with our strategy for the Canton network, supporting privacy-enabled on-chain infrastructure and solutions that help regulated institutions coordinate and transact in real time while maintaining the controls, governance, and trust that underpin the global financial markets. Then if we scroll right down here, we have Noel Kimmel, president from Ripple Prime, went on to say, as more traditional financial institutions move into digital native services in 2026, BNY is staying ahead of the curve, bringing digital assets directly into the banking system. We are proud to expand our long-standing strategic collaboration now as an early adopter of BNY's tokenized deposit services through its digital asset platform for cash flow management and liquidity optimization. I would like to go back to the BNY announcement right here. This is again BNY accelerating the digital asset push with tokenized deposits and how this literally solidifies that these organizations are all working together and that all of this smoke screen that we're supposed to be divided and separated and biased and opinionated and tribal against each other because we diversify in Canton coin or an XRP is a smokescreen. And it's all just nonsense created by people on Twitter meant to distract you from what's really happening. And that is the revolution of traditional finance, right? Or the evolution of traditional finance into this on-chain realm. So hopefully you guys enjoyed today's video breakdown, showing you guys that both the Canton Network and Ripple were conjoined in this fundamental news development today, showing you guys real technical analysis, no hopium, no hype, no retail garbage that just never materializes and doesn't come into fruition, keeping you guys in the loop with real-time analytics, fundamentals, technical analysis. If you guys want access to all this information on a consistent daily updated basis, head over to cyprxtrading.com. We'd love to have you on the team. I thought that I'd jump on real fast, make this video breakdown for you guys live. With that being said, many blessings to you guys. Hopefully we'll see you all on the inside. Be cognizant. Please be aware out there. Make sure you guys are paying attention to detail, and I'll see you guys in the next video breakdown.